I've been talking about Bitcoin for 2 years. And about 2 years ago, we promoted a gentleman, Fong Li, to be the president of the company. And he was the president and the CFO. So he's been running the day-to-day business hands-on as the president for the past 2 years. And 99% of the activity of the business is selling software.
Hi, I'm Crypto Positive. If you like this video, please smash like and don't forget to leave a comment in the comments section below. Thanks and enjoy the video.
So we have 2,150 people. We sell software, we make software. We have thousands of customers. We do thousands of transactions a quarter. We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. It turns out that once a quarter we do a Bitcoin transaction. And I talk about it a lot. So if you think about it, you realize that, it's very logical for the CEO of the company to be the person that actually manages the day-to-day business, because all the transaction and all of the labor intensity is all about software. I don't need to be the CEO in order to oversee the Bitcoin side of the business, because I can do that as the chairman of the board and as the chair of the investments committee, where we provide oversight for Bitcoin acquisition, and maybe once a quarter we might do a big deal, like borrow 200 million or issue equity or something, or we might buy Bitcoin, but it really is something that can be best supervised at the board level. And the path for Fong to be CEO has been set in stone. Well, it's been set for years and years. He was promoted to chief operating officer in 2018. And he's been the CFO of the company since 2015. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. And we hired a new CFO, a full-time CFO, Andrew Kang. He joined in May. And so once Andrew joined as CFO, that cleared the way for Fong to become president and CEO. I have been working with him hands-on to transfer the entire business to him for 7 years. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking indefinite intangible charge in our Q2 results. That by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just that GAAP accounting doesn't let you write up your assets. So if you're positive, you say, okay, well, this is normal succession and appropriate corporate governance. If you just want to write something trollish, you would pair the non-cash write-off with me taking the executive chairman role. But obviously, it has nothing to do with that. It's always been the plan for me to be executive chairman and for Fong to be the CEO.
But so why not have waited for better timing, no?
Because we were waiting we don't run the company based upon Bitcoin volatility. And we don't run the company based upon indefinite intangible accounting charges. That would be putting the interest of our shareholders after the optics of a random troll. We run the company based on what's best for the shareholders and what's best for the employees and what's best for the customers. So the trigger for us to promote Fong was the arrival of Andrew as the CFO. Because Fong was the president and CFO, and you can't have a public company where the CEO is also the CFO. It would be inappropriate to do that. Like, only in the most dire of circumstances would you ever do that. So when Andrew arrived, we wanted Fong to be CEO, and the accounting charge is an intangible non-cash charge. It really, again, as I said before, Bitcoin traded down to 17,600. We wrote our assets down to that level. Bitcoin is trading at 23,900 right now. We haven't written it up, but I mean, the shareholders understand this. You can see in their reaction to the announcement.
I want to get back to a point you made about the volatility, and that's an important one to bring up here. Do you think this makes the case that maybe Bitcoin just is not for everyone, that, we're not talking about right now what we've seen, a correction of 10-20%. I mean, this is extreme volatility. Is it just not for everyone? Like, maybe most folks just can't stomach it and can't risk that money.
I think that the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it. And then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way.
I saw you last in April of this year. I was moderating a panel with you at the ETF conference, and there was so much enthusiasm at the time, right? I think Janet Yellen had spoken that week saying crypto was transformative. Biden had just signed an executive order kind of greenlighting the crypto space. So there was a lot of excitement. Walk me through where you think things took a downturn. I mean, was it the inflationary scenario? Was it incoming interest rates? What do you think was the catalyst?
Yeah, I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the Three Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, it's awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as a institutional investment grade asset being embraced by regulators, legislatures, and large-scale investors. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between the good, the bad, and the ugly, right? The good would be a stable coin backed by cash equivalents that are transparently published every week, like Circle, right? The bad might be a tether, which it works and they're competent, but it's opaque. And the ugly is the UST that just completely melts to zero. And you could likewise say Bitcoin is the good, right? It's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, many of which are unregistered securities, and this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives, and that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that, there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.
So you beat me to the question, because I was going to ask, does that fast track regulation? But I guess the second part of my question is, and then are you confident then what had to be flushed out was flushed out? Or does more cleansing need to happen in the space?
I think a great deal of the bad behavior has been flushed out. I don't think you can say everything. I think there's still a lot of unregistered securities in the crypto ecosystem, and it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging, and I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp the way to segment the market and the right way to think about all these assets.
To that point, you came out saying that Ethereum is obviously a security, taking a lot of heat from the Ethereum community, including Vitalik himself. I guess my question is, like, why? You're going to get that from the Ethereum community, right? But do you feel that it's part of your mission to speak out on the topic of Ethereum?
No, people just want to ask me that question. They're just trolling me, I think. I want to speak out about Bitcoin, right? The chair of the SEC was asked probably 6 times in congressional testimony and other public appearances whether Ethereum was a security or whether it was a commodity, and he wouldn't endorse it as a commodity under testimony and in the public eye. So I think it's above my pay grade to opine, and I know there is a big debate. There's going to be a debate, amongst regulators. There's going to be a debate in D.C. So they will work that out. I happen to be of the opinion it's an investment contract. I think it's quite evident to anyone that spends a few minutes thinking about it. But, I'll leave it at that. People are free to make their own decisions.
I want to bring up something that Kevin O'Leary brought up on my show last week. He said the real gauge, and this is speaking to Bitcoin specifically, is where the institutional buyer is. He said right now it's zero. They have no Bitcoin, absolutely no Bitcoin. And anyone tells you the sovereigns have it is full of, quote, poo-poo. Thoughts on this? Where's the mindset of an institutional buyer when it comes to Bitcoin?
I think that Bitcoin is the only asset in the space that is broadly institutionally held, and it is more than zero. For example, we bought $4 billion of it, so we know that companies have it. We know that institutional investors have it. We know there are insurance companies that hold it. So it's not zero, but it is not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of J.P. Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about it, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible it's always going to understate the value, and it's also going to create it's always going to create confusion. because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference. And so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on.
I want to get to some questions. I tweeted that you'd be coming on the show, asked some folks to send in some questions. Some people DM'd me, some people sent messages to my email box. So if you don't mind, I'm going to try. I got tons, but I'll try and get through some here. Michael,
Okay.
Of course, this one speaks to my heart here. Do you still believe gold is going to 0 and Bitcoin is going to 1 million?
I think that Bitcoin is 1 million times better than gold, and it's going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You can see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service, and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple.
Okay, going on here. You suggested that Tesla buying Bitcoin was the beginnings of corporate America loading their balance sheets with Bitcoin. What do you think now that Tesla has sold?
They've still got some, but what I think is that the accounting is toxic, and FASB didn't need to address this issue before MicroStrategy, Tesla, and Square all bought Bitcoin, because there was no more than $1 million of Bitcoin in an operating company. So it was an immaterial issue. Now there are billions and billions of dollars of assets in publicly traded companies, so it's material. Lots and lots of people wrote to FASB asking them to take this up as an issue. FASB took a vote and unanimously agreed to take this up as a project, and they're working on the project right now. So we will see what they come back with. But for publicly traded companies with GAAP accounting, to adopt Bitcoin in a big way, there's a couple things you need. You either need to fix the accounting so it's not prejudicial and hostile to the ownership of the asset class, and that means at least make it kind of pari passu to holding equity or something. Like if you're holding equity, you take a mark to market and you have fair value accounting. So that's one possibility, and the other possibility is people have to hold it in the form of a security. And if you hold it in security, you would probably get fair value accounting, but that means an ETF, and preferably a spot ETF. So there isn't a spot ETF right now, and even if you have a spot ETF, the rules in public companies are you can't hold more than 40% of your assets as a security before you trip the SEC 40 Act. So MicroStrategy couldn't do what we did if we were holding Bitcoin as a security. We have to hold it as a property. So I think that you'll see large-scale treasury adoption when you actually see, the accounting start to look like fair value accounting, and or you start to see a gateway like a spot ETF. And if you don't have either of those things, then you have to have the majority of your enterprise value be constituted of Bitcoin. Like with MicroStrategy, we have 129,699 Bitcoin. So our shareholders can multiply the price of Bitcoin times that. And if Bitcoin moves up $1,000, they know we added $130 million worth of value. So that's not that hard. But if you were a company and 5% of your enterprise value was Bitcoin, or 2%, or take Tesla, they would have taken a massive intangible write-down and gotten all the negative optics, but it would still be immaterial to the rest of their P&L or to the rest of their enterprise value. So it's like all the downside, not so much upside. Whereas in our case, our shareholders will look at that and they can do their own calculations. So we don't necessarily suffer from an indefinite intangible non-cash charge. So I think that you will have to see some changes before you see big corporate adoption there.
You mentioned the spot ETF. How far away are we from that becoming a reality for you? Is it really far away?
I'm optimistic.
Okay.
I'm optimistic in the next 36 months we'll see improvements in both the accounting and the spot ETF, and it might come sooner. It might come in a year. I think. Go ahead.
This question came in via Twitter. My question to Saylor is, how can everyone in the world become rich off Bitcoin? There has never been a get-rich scheme the entire world is in on, and everyone makes out profitable. And how is the hedge versus inflation narrative valid when it's lost 60% of its value during these times?
Again, you got to take a 4-year or longer time horizon. Bitcoin is outperforming everything in 2, 4, 6, 8, and 10 years. It's just that simple. What you want to do is get rich slowly, not get rich quick. And that means that the time-tested technique for investment is you buy high-quality, scarce, desirable property and you hold it forever. And you just got to figure out what is scarce and desirable and high quality.
I'm going to throw in a lighter-hearted question here. Has Michael ever considered becoming a professor at his alma mater, MIT, for a full semester to teach engineering or possibly a Bitcoin course? Thank you.
I did a little mini course, the Saylor series with Robert Breedlove, which was like 20 hours or 22 hours of lectures. It's been seen by 250,000 people. So if you did the calculation, right, it's like if I taught 1,000 students every year for 250 years. I did another 4-hour thing with Lex Friedman and a 4-hour discussion in my library in my house in Miami. It's been seen by 3.9 million people. And I calculated that that's like more communication than every meeting I had in my entire life. So the short answer is, I think I'll go on the podcast circuit. I do like teaching, and I'm very open to looking at more academic things. But I think the way to do it in the 21st century is with scalable podcast mediums and streaming video, and not the 20th century way is going to a classroom with 100 students at a time. Think about 100 students at a time. Teach 2 semesters and get to 200 students a year, and teach for 40 years or 20 years and get to 4,000 students. And you get to 4,000 people on your show right in the first few minutes after you upload it, don't you?
Mm-hmm. Absolutely.
So we're all educators. We just got to educate. Look, Danielle, I don't hate on the goal people. I wish they wouldn't hate on me. It's not I don't get the idea. The point I'm trying to make is, you want to give music to 1 billion people, give them free digital music. And if you want to give money to 1 billion people, give them digital money. And if you want to give education to 1 billion people, give them digital education. And I love the Steinway piano, and I love a gold watch, and I love MIT in the classroom. But you got to go forward. You can't go back if you want to make the world a better place.
All right. Well, on that point, surprise, surprise, in a turn of events, Frank Justra also sent in a question. Heard you were coming on the show. He was your opponent in the great historic debate. Do you concede, Michael, that perhaps it was a bit irresponsible to advise investors to sell everything, mortgage their homes, and put it all in Bitcoin?
No, first of all, that's a trollish comment. If anybody looks at what I've said consistently since September of 2020, what I've said is Bitcoin is scarce, desirable property, and I intend to hold it forever, for the rest of my life. I'm not a speculator. And what I've also said is, if you're in a collapsing currency environment, you should have negative working capital. You're better off to have debt than to have equity. And what's happened in the past 2 years is Currencies have collapsed. You were better to have debt than equity. When I told people that I like mortgages, the mortgage rate was 2.7%. Mortgage rates nearly doubled. And if you had a chance to take a mortgage at 2.8% and you waited till the mortgage rates went to 5.2%, the cost of your home just went up by 80%. So paying off your home with cash is probably not a good idea when mortgage rates are cheap. Holding cash that's losing 20% of its value is not a good idea. That the blue dollar rate is 300 pesos to the dollar. I keep pointing this out. So I think some people just want to find something skeptical or critical to say, but telling people that they ought to buy desirable things and take cheap money to do it and hold it forever is simply the way that you preserve generational wealth, and it's worked that way for a long, long time. And it still works that way. So, I don't apologize for saying I like cheap mortgages, and I don't apologize for saying people should buy Bitcoin. Everybody can decide how much Bitcoin they want to buy versus how much land versus how much art versus how much whatever else they want to own. The other thing that Frank doesn't acknowledge, again, is 2 years ago, Bitcoin was $10,000 a coin. And since I started, gold is down 15% and Bitcoin is up 100%. So for everyone that has the time horizon more than 2 years, your choice is lose 15% of your money or double your money. And if you have a time horizon of less than 2 years, you can't reasonably think of yourself as an investor. You're just a trader or a speculator.
I mean, I guess depends the year points we're working with. I mean, I always say you can always adjust it to make your case, but I'm still going to get you in front.
If you always adjust it to be less than 2 years or less than a year, then you're always a speculator, right? If you're an investor, you're taking a 4-year time horizon or a 10-year time horizon or a 30-year time horizon. So it's much more... any advice you're giving to someone for 2 months is just trading advice, and I don't give anybody trading advice.
I can say, since 1998, the gold market has lapped the S&P. So, everyone can make their case depending on the time horizon you're looking at. But let's step outside of gold and Bitcoin for a second. Let's get out of this bubble for a second, because I just want to get your general thoughts. Kathy Wood coming out saying we're definitely in a recession. I want to get Michael Saylor's thoughts on the U.S. economy, how you see things. Are we in a recession?
We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right, it's above my pay grade.
Just curious to get your thoughts on the U.S. dollar, the strength of the U.S. dollar. Is it just, the bell at the ball, the strongest horse in the race? How do you see it? Is it going to keep marching higher or not?
The dollar is the strongest medium of exchange in the world, and so it is strengthening against other currencies, but the currencies are the weakest store of value. The foreign currencies are weak store of value assets. So foreign currencies are collapsing, like South American currencies, African currency, Sri Lankan currency, Middle Eastern, Turkish currency, Lebanese currency, Russian, Ukrainian currencies. Russia, I guess, doing better because they're tied to commodities. But I think that you've got a basket of strong currencies that be pegged to the dollar, and they're losing 15% of their value or more a year against scarce assets. And then you've got weak currencies that are losing 15% of their value against the dollar, right? If we look, the South African Kruger Rand, the Korean Won, the Great British Pound, the Euro, they're all down 11 to 13%. Polish is down 16%. The yen's down 18% over the course of about a year. So they're collapsing against the dollar. And then the developing markets are collapsing 40% against the dollar. So do I think it'll happen? Continue? Yeah. I actually think that in a digital world, the 8 billion people want to hold a dollar. They don't want to hold a local currency. So if I could swap, like name a currency in South America you want to hold other than the dollar. There isn't one. So the only thing that keeps people from swapping all their local currencies for dollars is whether they trust Tether or whether they can get access to Tether or Circle, right? Right? Because UST wasn't a trustworthy dollar, right? And maybe you can't get access. But I think that there's no doubt if you're looking at your bank freezing your assets and devaluing your assets in local currency, you know.
С тобой так хорошо, с тобой и летом, и зимой, с тобой я бы всю жизнь провел. С тобой